This is the Asia Trade. I'm Haidi Stroud-Watts here at the UBS Australasia Conference in Sydney.
And I'm Paul Allen. The top stories this hour. Asian share markets set to follow Wall Street higher as the post-election Trump trades power on. The dollar hitting a one-year high and Bitcoin briefly topping $88,000. The US president-elect said to be narrowing his shortlist for Treasury Secretary as Republicans edge closer to a House majority. And Japanese Prime Minister Ishiba eyes a meeting with Trump as soon as next week after securing parliamentary support in a rare runoff vote.
And Paul, I am joining you here from downtown Sydney on day 2 of the UBS Australasia Conference, and the focus today really will be on geopolitics, the implication for a Trump 2.0 presidency on the rest of the world, including, of course, these, really trade exposed and in a lot of respects security vulnerable countries like Australia, like Singapore as well, right? So these are some of the guests that we will be speaking to. We'll also be taking a look at the outlook when it comes to commodities demand, the copper growth story in light of the weakness and uncertainties that we continue to see around China's economic recovery. Ivanhoe Mines, the founder and executive co-chairman, Robert Friedland, will be joining us very shortly to talk about the demand outlook and some of those geopolitical risks as well. We'll also be speaking a little bit later on in terms of the implications for Australia. Arthur Sinodinos, who of course is the Asia Group partner, chair of the Australia practice, but was the former Australian ambassador to the US. We will also be speaking on sort of some of the geopolitical risks pertaining to Trump's Israel policy. Professor Haidi Siegel from New York University will be joining us too, Paul.
Well, in terms of the implications of a Trump presidency, let's take a look at Exhibit A. Bitcoin, off to the races at the moment. It did top 88,000 briefly, as we mentioned. So it's up 30% since the election. Of course, Trump on the campaign trail was striking a very crypto-friendly tone, so we may see crypto-friendly regulators and lawmakers. The crypto options exchange Durbit says investors are betting that we hit 100,000 by the end of the year, and it sees 780 million in open interest on the Bitcoin trade. Well, in terms of more traditional trades, we've just opened up this Tuesday morning here in Australia. We've got the ASX just off by a few points in the early going, of course, a staggered open, so let's check back in a little while. Elsewhere, we've got Nikkei futures flat, and the Nikkei ended Monday flat as well. As we mentioned, Shigeru Ishiba does remain Prime Minister in Japan. He'll be looking to shore up his leadership by putting together an economic stimulus package. We'll bring you details of that in a moment. And he says he's already had a friendly phone call with President-elect Trump. Taking a look at the yen as well, it is weakening a little bit, but that is perhaps a function of dollar strength. In terms of the US, we did have trading for equities on Monday, even though it was Veterans Day. The bond market was, however, closed. If we're seeing their S&P futures currently looking flat, but we did see stocks nudging higher in the US on Monday. Bond futures, we see the yield on the 10-year also creeping up a little. Of course, yields indicating the possibility of some rather inflationary fiscal policies to come. All right, for more on the markets, let's bring in our executive editor for Asia Markets, Paul Dobson. So, Paul, what's the next thing investors are going to need to focus on when it comes to the Trump trades?
Yeah, so apart from obviously, when we get to that 100,000 level on Bitcoin, I think investors will be paying a lot of attention to what the makeup of the Trump administration looks like. We're pretty confident, it would seem, judging by the way the market has been trading, that the Republicans will complete that clean sweep by taking the House as well. What people really want to know is who will be the Treasury Secretary, how much of a financial or fiscal hawk will they be, how much will they endorse, Trump's plans for spending, for tax cuts, how much of a mind will they have on balancing the books versus, running up a greater deficit, and what will that mean then for Treasury market yields as well as for the equity side of things. So I think that is a key area of focus. Who comes in, what those characters are, and what those policies will be. I think longer term, the other thing that people really want to hear is, we heard on the campaign trail all about tariffs, about plans for day one, slapping blanket tariffs across the board. Is that really going to be the case, when when the administration starts to come together. And if it is, how will markets react? It's going to be really interesting. Lots and lots of different variables there for investors to try to get their heads around.
What is the perceived impact on trading in APAC, right? Because on the one hand, there's quite a bit of vulnerability. On the other hand, I can see markets like China actually being decorrelated.
Yeah, so there is that. I think, Haidi, one clear channel where this is being expressed is in the stronger dollar, and that means weaker currencies pretty much across the board in APAC. And I think, what we're starting to see in some administrations is a little bit of pushback against that, be it some kind of intervention or at least verbal warnings against too much currency weakness. But, the more that the dollar gains support from the idea that Trump's America First policies are going to be supported for the US at the expense of other countries, the more you might see the dollar continue to gain, and the weakest links in the emerging market complex, in the Asia complex, coming under increasing pressure. So we'll be watching quite carefully in our world for those pressure points to see what that kind of give is. I think for Asia equities, it's not necessarily, a blanket negative. It could spur competition. It could spur domestic policies that are supportive as well. That was the hope for China, of course. Didn't get too much of that last week, but it seems like maybe the Chinese administration is keeping some of its powder dry so that when we do get into a more, how would you describe it, more combative environment in terms of economic policy, then potentially there is extra levers to pull in terms of supporting the markets and supporting the economy.
Bloomberg Executive Editor for Asian Markets, Paul Dobson there joining us. Well, Republicans are on the brink of clinching unified control over the White House and Congress under Donald Trump. The president-elect, meanwhile, is narrowing the field of candidates for major appointments, such as Treasury Secretary. That could be announced this week. Bloomberg's political news director, Jody Schneider, joins us now from Washington. So it does look ever more clear that the House is likely to be controlled by a Republican majority, so they therefore have that trifecta of control in D.C. How does this sort of play out for President-elect Trump, and have we seen a response on how he potentially, will use that?
Yeah, Heidi. Well, clearly he is moving quickly. We're hearing, it hasn't even been a week since it was clear he would be the president-elect, and we've seen a lot of announcements and a lot more speculation as to whom will be in his cabinet in key positions. Just in the last 24 hours, we've heard that Stephen Miller, who was the architect of his travel ban in his last presidency, in Donald Trump's last presidency, will be a deputy chief of staff for policy. So that really does seem to bolster the argument that Donald Trump will really deliver on this promise to really curtail immigration and perhaps have those mass deportations that he has warned of. We also saw Tom Homan, who he will name to be a border czar, who would also continue in that effort. So I think that's one of the things we'll definitely see. He is looking to name Elise Stefanik, who is a congresswoman from New York, to the UN position, to a cabinet position, to be the U.S. ambassador to the UN. And of course, that in her current role, she is seen as someone very loyal to Donald Trump, who will probably carry out much more isolationist policies there. So we're starting to see all that take shape. Also, who he said he won't name. Two people he said he won't give positions in his cabinet. Mike Pompeo, who of course was key to foreign policy in the last Trump administration, seen as more of a centrist, somebody who would perhaps be on the side of giving more money to Ukraine, and also Nikki Haley, who he kind of famously battled with in the primaries, who had been his UN ambassador. He says they're not going to be on his cabinet choice list.
Well, Congress is back this week, and it might be a Republican-controlled Congress as well. What will we learn about leadership for the next Congress?
Yeah, well, in the Senate, they are going to have a vote, we think, as soon as Wednesday on who will replace Mitch McConnell as the majority leader now that the Republicans are clearly going to be the majority party in the U.S. Senate. Looks like 53 seats at this point. There's a couple still up in the air, but they are going to clearly have that majority. And the real question is whether Rick Scott, a congressman from Florida who is seen as a Trump loyalist, whether he can edge out the two Johns, John Cornyn and John Thune, who are said to be the leading contenders for the post. But Rick Scott's making a real push, and some think that his MAGA credentials and his loyalty to Trump may push him over the edge. So we'll watch for that. The House, which is still yet to be decided in terms of the majority, though it looks very much like mathematically it will be Republican, they will start deciding their leadership for committees, but the Speaker of the House is voted on by the whole House of Representatives. That will happen in January. Mike Johnson looks to be pretty secure in getting that post again.
All right, Bloomberg's political news director, Jody Schneider there. Let's stick with politics, this time in Japan, and Prime Minister Shigeru Ishiba is eyeing a meeting with Donald Trump and a fresh economic stimulus package after winning Parliament's backing to stay in the top job. Let's get more from our Japan economy and government reporter, Alistair Gale in Tokyo. So, Alistair, Ishiba safe for now, but for how long? And what's his new economic policy package going to do about it?
That's right. Morning. Yes, Ishiba managed to get through this important hurdle that he faced to stay as Prime Minister. He was facing the prospect of being the shortest-serving Prime Minister since the war. He didn't pass the test yesterday, but he did. Parliament voted through a runoff process to keep him in the job. So he'll be happy about that. But there's lots of challenges ahead. As you say, he wants to put together an economic stimulus package soon to do various things to help with disaster relief in areas around Japan, but also to help those on low incomes that are struggling with high food and fuel prices. And in order to do this, he needs to have the cooperation of opposition parties, because, of course, in the election, he lost his majority, the ruling coalition, that is. And so he has to work with the opposition and find people who will support his ideas and perhaps take their ideas on board as well. So there's going to be a lot of horse trading here. He has to find a way to keep his minority government stable. We're also expecting him to go to APEC meeting in Peru next week, as well as a G20 summit in Brazil. He's likely to meet President Biden and President Yoon, amongst other leaders. And we're also hearing that the Japanese government is trying to arrange a meeting with the incoming President Trump at some point after those South American meetings, possibly on the way back through, on a refueling stop on the way back to Japan.
Alistair, there's a fair bit of concern and criticism that Ishiba may not have the diplomatic experience to deal with an incoming Trump administration.
Yes, that's right. He doesn't have that experience as a sort of global diplomat. Of course, many people will be comparing him to the former Prime Minister Shinzo Abe, who was in charge when Trump was last president. And of course, Abe and Trump had a good relationship. They played golf together. Trump still talks in glowing terms about his relationship with Abe. So there's a fairly high bar for Ishiba to try and get over here in terms of building that kind of personal relationship that worked so well last time around. He did talk briefly yesterday in a press conference about how he's looking forward to meeting President Trump. He does not want to have a transactional approach to the US-Japan relationship. He said he doesn't think that Japan and the US should butt heads together. They should look for ways to benefit each other and to ensure peace and security in the Asia-Pacific region. So he's obviously thinking ahead of how he's going to approach this meeting with Trump. But this is going to be closely watched because, as you say, he doesn't have the experience, and the personal relationship is very important when it comes to the US president.
All right, Japan economy and government reporter Alistair Gale there. Coming up on the Asia trade, Defiance ETFs joins us to discuss what the markets are like about Trump's return to power. Plus, we head to the Salt and Eye Connections event in Singapore to talk investment strategy with Canada's second largest pension fund. Much more ahead. This is Bloomberg. Let's take a look at how we are tracking on the ASX after the first 18 minutes of trade. It is pretty much a carbon copy of what we saw on Monday, with the ASX down 1/3% and the materials sector weighing. Well, that is exactly what happened yesterday. ASX is down by 1/3% and materials off by 2%. Fortescue is off by 1%. We're seeing iron ore and copper both continuing to sink, Haidi.
So, were you born in Australia?
Well, we're back at the annual UBS Australasia conference here in Sydney. Investors, business leaders, policymakers have been gathering over the past couple of days to discuss a global investment landscape. And joining us now exclusively is Robert Friedland, who's the Executive Chairman and founder of Ivanhoe Mines. Robert, always a pleasure to have you with us, and we always appreciate your time, especially at a time of enormous uncertainty or opportunity. What would you characterise the risks and the challenges at the moment?
We're always optimistic about the state of the world. There's a lot of new people around Donald Trump, like Elon Musk, a lot of Silicon Valley people. He looks like he's going to run his second term more like a real executive, a CEO. And if he can attract attractive young people from technology, I'm optimistic about the future of the U.S. And if the U.S. grows, it'll lift the whole world.
That makes me think that you're optimistic about the energy transition.
I am. There's no choice. The Mediterranean Sea was hotter last summer than ever recorded. We've had huge rainfall events all over the world and unusual weather. The pressure to maintain that will happen no matter who's running any government. It's just a long-term struggle to get a hold of whatever factors are causing anthropomorphic global warming.
So you're not worried about a realignment of climate and energy policy under the next US government?
We don't worry, we just do something about it. We're working on changing the way we mine the raw materials we need, and we're working a lot on new forms of geothermal energy to supply clean electrical energy with no global warming gas. America is a genius. It produces more GDP with less units of carbon dioxide than other advanced societies, and we think America will continue to evolve in that direction.
So you are more optimistic and constructive on the opportunities for Ivanhoe Electric then in the next 4 years?
Of course, copper mining in the United States needs a renaissance. We haven't really had a new mine for copper in the United States in generations, and it's desperately required for everything you want for a cleaner and greener world.
When it comes to broader copper demand, in fact broader commodities, it feels a little bit like the market is in a holding pattern right now, waiting to see what the US economy kind of shapes up to look like, what those policies look like, waiting to get more stimulus out of China. Is that how you feel? Or do you think that the outlook is actually a lot more certain?
I spent a lot of time in China recently. China's still there, and China still has a lot of cards to play. Its exports to the United States are much lower now than they were in the first Trump administration. So they have a lot less sensitivity to tariffs in the United States than 7 or 8 years ago. So I think China will come up with a policy response, waiting to see what the Trump administration does. And in the end, both societies may wind up making a deal.
What are we getting wrong when it comes to how we look at China and the economy there now?
What are we getting wrong about China? Most people never go there. Most people have never seen it, so they perceive it only in Western media in the United States. I think more Chinese have been to the United States and understand the United States a lot more than the number of Americans that have actually been to China, especially recently. So China is still taking a number of steps to stimulate its consumer demand, to sort of get rid of its problems with local government debt. And I think over a 3 to 5 year term, China still looks very solid and very important. And a lot of the smartest investors in the world are looking to, again, get exposure to Chinese equity markets, which are sold off and a lot more attractively priced in the United States at an all-time high.
being there in China, as you have over the past 40 years, what are you seeing in terms of the levels of government involvement or intervention on smelting capacity?
Governments everywhere in China. China's a completely different system than we have in the United States. China's like a giant hive of bees cooperating. It's sort of a completely different philosophy than we have in the United States based on the individual. But the American-Chinese relationship still remains the most important global relationship. The two giants need to find a way to get along. And I'm quite optimistic that the transactional nature of the United States government will reach an accommodation with China rather than blow each other up.
When it comes to the current dynamics in the copper market, I'm wondering if you've observed any changes in the way that trade flows, transaction flows have changed at all globally?
Yeah, things have changed a lot.
Yeah.
China has a lot of refining capacity for copper, but doesn't have enough feed to feed their smelters. So there's a shortage of copper concentrate in the world. So smelting and refining charges for copper are the lowest we've ever seen. So there's a shortage of copper metal to continue to green the world economy, and now even more so on national security concerns, with so much demand for artificial intelligence, data centers, and attendant relationships with national security.
Equity markets are soaring. You've sounded very optimistic in this conversation. Does that extend to more M&A activity? Are you prioritizing allocating funds to inorganic growth?
We would buy somebody if we could find something with assets as good as what we already have. As you know, we're mining the highest grade copper in the world, and it's the greenest copper because it's powered by hydroelectricity. We don't generate any global warming gas, and we have a fantastic business at $3.50 or $4 copper, let alone today's very attractive price. And we're growing very rapidly. So we look forward to a very bright future for the Democratic Republic of the Congo, where we're operating for copper, and for South Africa, we're about to start a major precious metals mine. So the prospects for mining at this time, they're very bright.
But you're always keeping an eye open to deals?
We look at things all the time, all the time.
Robert, really great to have you, as always. Robert Friedland, who's the Executive Chairman and founder at Ivanhoe Mining. We have more from the UBS Australasia Conference coming up, including prospects for peace in the Middle East or further conflict. New York University London professor joins us, and we'll also be hearing from the Australian ambassador, the former Australian ambassador to the US as well, on his views on Trump's threat to potentially around the Asia Pacific and what the implications are for Australia. Plus, in a couple of hours, we'll have an interview with the Alcoa president and CEO, Bill Opplinger. More ahead on the Asia trade. This is Bloomberg.
We are watching Bitcoin as it continues to surge ever higher. Now got 90,000 in its sights. It was 88,000 when we started the day, now 89,124. Of course, incoming President Trump administration looks to be crypto-friendly. Crypto options exchange Durbit says investors are betting that hits 100K by the end of the year. With more ahead on the Asia trade, this is Bloomberg. Got some breaking news out of Australia. Consumer confidence numbers for the month of November, and a big pop here. We've got consumer confidence rising to 94.6. Just to give you context, the level of 100 is when optimists begin to outnumber pessimists. So we still have pessimists outnumbering optimists at the moment, but that's a big, big rise, up 5.3%. And consumer confidence now at the highest since 2022. Consumer sentiment better by 18%. Family finance versus a year ago rising as well. As to the reasons, well, nothing much has changed in Australia, so let the speculation begin. Let's take a look at markets. However, here in Australia, we've got the ASX off by 0.4% in the early going. This really is shaping up to look like a carbon copy of yesterday. The index a bit lower, but materials substantially lower. We've got that sector off by 1.9% at the moment. Nikkei futures, though, setting up for a positive start. We do, of course, have the Prime Minister, Shigeru Ishiba, staying in the top job as Prime Minister, at least for before now, attempting to arrange a meeting with President-elect Trump. S&P futures, well, the S&P had a good day in the US, futures pointing just a little bit lower at the moment. Well, let's get some more markets perspective now with Sylvia Jablonski, co-founder, CEO and CIO at Defiance ETFs. And Sylvia, you're very upbeat on US growth, the manufacturing story, the inflation story as well, and certainly markets have been bearing that narrative out. We've seen most US assets surging higher following the US election. What do you do here? Do you just buy everything US heading into the end of the year?
Hi. Well, yes and no. So we certainly can't buy everything going into the end of the year. But I think, the way you kind of introduced it there is very much what my belief has been. So I think that, it's been a strong year, and it's been a strong year, outside of the election, because inflation is coming down. The Fed was cutting rates. Corporate earnings held up. Jobs were pretty good, give or take a read or two. The consumer remained strong and spending. Manufacturing data looked stable, things like this. And so, I think the market was on the right track to have a bullish year end and to kind of rally into the year with seasonality anyway, and then throw in an election. And election years tend to be positive years for markets. And it seems like this election was one that the markets, really liked. And so we've really seen this broad-based rally across everything. But in terms of, and so that's sort of great. And I think investors can kind of hold on to their gains there, hold their positions. But what I would say is that now you have to kind of think about where the puck is going, right? So the Mag 7 have done quite well, but there are 493 other stocks that are now probably going to get some love with the rates coming down and, the economy strong into year end. And so I think, kind of diversifying a little bit into the X-Mag could be interesting for year end. And then, the semiconductor, AI, and crypto stories remain intact.
How durable is this story, though? Because deregulation, obviously the market loves it. But do you feel perhaps the lessons of the global financial crisis are being forgotten here? Are we sowing the seeds in terms of the next one, in terms of widening deficits, an ever-growing debt pile, no plan to do anything about it, the stripping away of guardrails? Are we setting ourselves up for something down the track?
Well, I think that, that's certainly a topic that is on the minds of a lot of investors, right? And I think, again, like regardless of the election, we would have been in this position that we're in now where, assets are rallying. I think in the near term, even next year, we're looking at single digit corporate growth. But I think to your point, eventually, if we keep spending and don't have a plan to kind of make up the budget deficit, and we remain with these higher levels of debt that don't go away. I mean, I think it was Paul Tudor Jones that say there will be a day of reckoning, right? So that's something that I think a lot of economists and investors are going to be keeping their eye on. So if you have inflationary policy, there has to be something to offset it, and that remains to be seen in terms of what happened in Washington.
Well, we haven't had any trading in US debt for a few days due to the Veterans Day holiday, but treasuries do seem to be reflecting a little bit of nervousness over potentially loose US fiscal policy. Do you see a scenario where the yield on the 10-year cracks 5%?
I think, it'll depend on what happens with that actual policy and what actually gets passed versus, what has been discussed on the actual, on the campaign itself. And so until we have that information, I don't think we'll know. And I think that the 10-year is reflecting the fact that there could be trepidation about inflation kind of going the other way now, particularly with some of the, whether it's tax cuts or tariffs or things like this, increased spending. But, I think a lot of the inflation numbers that were sticky were in this service area. So that's one thing that we have to look at. It'll take some time to implement these policies, and hopefully there'll be, a critical eye on their impact on inflation. I think that will kind of determine where the 10-year goes and if we get some stability there.
Yeah, Jay Powell was talking about potentially a bumpy ride ahead for inflation, but looking ahead to 2025, I mean, we already have some traders trimming their bets on expectations around Fed rate cuts. Have you reevaluated your attitude towards this at all? And also linked to that, do you think we could be heading for a showdown between a Trump administration and the Fed?
Yeah, oh goodness, that's going to be interesting for sure, right? So Fed Chair Powell cut this last time around, and a lot of the data was looking pretty good and pretty strong. Employment numbers were looking good. GDP is holding steady 2 to 3%. Inflation is coming down, and it could have been a time where they could have thought about pausing, right? So it wouldn't be surprising to me that if we keep getting this solid data, CPI, PPI data, jobs numbers, spending, manufacturing looking good and solid, perhaps the Fed just takes it. Perhaps, it's going to be a meeting to meeting type of decision where it goes back to what we heard of before. Let the data do the talking, right? And they'll kind of decide on that. In terms of a showdown, I mean, I don't know where that lands. I think that there has to be, kind of cause to fire the Fed. And I don't think that, doing a kind of a bad job on rising or cutting rates is one of the causes that is possible. So we'll have to see what the reasoning would be for either side to kind of push it too far. But hopefully there can be some resolution there. I mean, the economy is strong and it would be supportive of equities markets and a new presidential candidate coming into office, managing, into a strong economy and supportive fiscal and monetary policy.
All right, Sylvia, thank you. Always great to get your insights. Sylvia Jablonski, their co-founder, CEO and CIO at Defiance ETFs. Back to you, Haidi.
Well, Paul, Nouriel Roubini says that Donald Trump's return to the US presidency could see the re-emergence of the so-called bond vigilantes if he follows through with his big spending plans. I spoke exclusively with the Roubini Macro Associates CEO here at the UBS Australasia Conference.
Certainly, the election of Trump is going to make big economic policy differences. The question, what's going to be the impact on growth and inflation? Some of his policies are going to keep growth strong and keep inflation low. He's pro-business. He wants to deregulate the economy. The reduction of tax rates for the corporate sector is going to be good for private business confidence. And moving towards more production of fossil fuels is going to reduce maybe energy prices in the United States. Those sets of policy would imply good growth and inflation under control. On the other side, during the campaign, he said 10 to 20% tariffs on all imports in the U.S., up to 60% on those from China, trying maybe to weaken the value of the dollar, draconian restriction to migration, if not mass deportation, tax cuts that may be unfunded and increase the budget deficits, and potentially interfering even with the independence of the Fed. If they were to follow those latter types of stagflationary policies, inflation will be higher, growth will be lower, bond yields will be higher because there is more inflation and more real rates with unsustainable deficits. That's going to crowd out economic growth, and bond yields above 5% would imply a correction of stock prices and negative impacts on the economy. So the question is whether he's going to be more moderate or more radical in his policies.
And it's a combination that we need to sort of unpack, from fiscal to immigration to trade to geopolitics. But I wanted to start off with the fiscal. What sort of time frame would you be looking at in terms of the transmission to that, to potentially that stagflation, or at least, pretty reflationary impact? And how does that play out for the Fed?
Well, it's clear he wants to make the tax cuts of 2017 permanent. Plus, he made other promises during the campaign would imply that you'll have another almost $8 trillion of debt or deficit over the next decade. If those things were to happen, I think the market discipline is going to be quite quick. Bond yields have been already going higher before Trump was elected on expectation of his election. They went even higher right after his election. They went slightly lower just because the Fed said, okay, we're going to cut rates and going to wait and see. But if a certain sets of policies, starting with the fiscal, are implemented and imply higher inflation and overheating of the economy, the Fed will have to cut less, maybe eventually stop sooner, and in a scenario in which actually other policies are stagflationary, leading to higher inflation, whether it's currency or tariff or migration restriction, then the Fed could even decide to raise rates, and then the Fed and Trump will be on a collision course. I would say, however, is that he cares about market discipline. And if bond yields go higher and the stock market correct, that's a bond vigilantes in the market saying your policies are unsustainable. And if he chooses the right economic advisors, they're going to warn him against policies that eventually have such a market impact and may lead to policies that are more moderate rather than radically populist in the first place.
And you have been critical of higher equity prices and what markets are doing at the moment, which is quite a great deal of exuberance, right? Do you worry when you take a look at what market participants are not pricing in, perhaps, in terms of the downside?
Well, the market has gone even higher after his election because his policies look like they are leading to greater growth, reflationary trades, and overall pro-business, pro-private sector, pro-M&A, pro lots of other things that are good for the private sector. I think that markets are still in wait-and-see mode to figure out whether the policies are going to be hurting the economy, whether it's tariff, currency, migration restriction, interfering with the Fed, having unsustainable budget deficits are going to be implemented. Maybe the markets believe that the market discipline is going to discipline him in advance, knowing that policies are not sustainable, are going to lead to bond market vigilantes and the stock market punishing him. So the market is optimistic that those things are going to restrain him ex ante as opposed to ex post. And that's why the markets are rallying.
Roubini Macro Associate CEO Nouriel Roubini, they're speaking to us earlier here at the UBS Australasia Conference. More ahead from the conference and here on the Asia Trade. This is Bloomberg. We have some breaking news when it comes to how the incoming Trump administration is starting to shape up. We're hearing that President-elect Trump has asked Republican Mike Waltz, who's a Green Beret veteran who served in Afghanistan, the Middle East and Africa, to be his White House National Security Advisor. This is according to reporting in the Journal, according to people familiar with the conversations. The NatSec advisor is a highly influential post, of course, appointed by the president. It doesn't require Senate confirmation. Coordinates among all top national security agencies is what it's responsible for. It's also tasked, of course, with briefing the president and executing his policies. Waltz will step into his role, of course, amid these ongoing conflicts on multiple fronts in the Middle East and Ukraine, as well as uncertainties across Asia as well. We have seen, Paul, a number of appointees being named by the president-elect today.
Well, let's talk about Softbank, expected to report a return to profitability in the September quarter thanks to a rebound in tech valuations that promises to boost Vision Fund returns. For more, technology reporter Minjong Lee joins us now. So, Minjong, what are we looking for in today's results?
Right. As you just said, we're expecting a relatively strong quarter compared to the last one and previous year. Largely it has to do with the recovery in valuations for big tech startups, including Coupang and Didi Global. But another big part of the rebound has to do with a series of Indian listings that Softbank saw during the September quarter. Companies like e-scooter maker Ola Electric and baby product maker First Cry. These are companies that went public during that quarter and had strong results. So the August and the quarter of September was a positive quarter for the Vision Fund, which hasn't happened in a while. So we'll see how the numbers actually look later.
Minjong, what do we know in terms of this Jensen Massa fireside chat?
Right. We don't have that much clarity on what could actually come up during the chat, but based on what has been happening in other regions, for example, in India, there could potentially be some sort of partnership between NVIDIA and Japan relating to AI infrastructure in the country. But this is all very speculative. We'll really have to see what they talk about during the chat when it actually happens tomorrow. But definitely something worth watching, given that the two very iconic tech leaders are meeting in a rare occasion in Japan.
Our technology reporter Min John Lee there. More ahead on the Asia trade. This is Bloomberg. And of course, we continue to watch the exuberance of these Trump trades, and even with US markets closed for Veterans Day, we are just seeing this sort of one direction trade when it comes to Bitcoin, right? Take a look at what we're watching when it comes to just the level of exuberance associated with not just Bitcoin, but of course broader cryptocurrencies. But another record high in what is now being characterized as an undeniable bull market. Bitcoin surging above 88,000 for the first time. Really, of course, boosted by the president-elect's support for digital assets, the prospect of a Congress featuring pro-crypto lawmakers as well. We saw digital asset industry insiders spending over $100 million backing these crypto-friendly candidates. And we've seen, that jump of more than 30% for Bitcoin since the election. So at least in the short term, we're seeing that investment pay dividends.
Yeah, certainly a case of buy now, ask questions later, and there are still plenty of questions. I mean, how quickly can the agenda be implemented, for exactly? Is a strategic Bitcoin reserve even feasible? These are some of the questions that are being asked by the venture capital company A16Z Crypto, writing in a blog saying, look, it's just too early to tell how everything's going to shake out here, but at least for the meantime, Bitcoin bulls are, they're out and running.
Yep, up and running. The expectations will get to $100,000 by the end of the year. We're seeing over $780 million in open interest on the trade, according to Deribit, which is the crypto options exchange. But as you said, the criticism over digital assets, it's still there, right? We have seen those concerns from the crackdown on across the asset class under President Biden, the SEC Commissioner Chair, Gary Gensler, repeatedly labeling crypto as being rife with risks of fraud and misconduct, and we really saw those screws being turned after that 2022 market rout. The litany of collapses, lest we forget about those, the bankruptcy of FTX, the entire sort of story around Sam Bankman-Fried, which is still playing out. But Paul, that feels like a really forgotten recent memory, right, as we just see so much enthusiasm pile into crypto and into Bitcoin, with the promise of supportive regulation, and the sweep of the House and the Senate certainly makes the passage of crypto bills look a lot more likely and a lot more seamless.
Yeah, let's talk about some assets that actually physically exist in tangible form. Talking about oil, for example. That's a little bit weak. Bank of America sees a non-OPEC supply accelerating as demand growth slows into 2025. Also questions over China demand as well. And linked to that, iron ore prices, they're recovering now, but they have been slipping recently. We've seen the iron ore price soften, I think, about 3% odd over the past 3 days or so. Again, questions around stimulus in China. And that's weighing on the materials sector here in Australia as well. That's off 2% right now after nearly an hour of trading. The broader index off by 1/3%. Now take a look at gold as well. Now that's traditionally been the safe haven play. Well, it's now fallen behind the S&P 500 after yesterday's drop and the gain that we've seen for equities. Also, according to analysis from Bloomberg, gold bulls have been trimming their long positions now for 2 straight weeks. The gold price backing off a little, still though pretty high, $2,629 an ounce. Well, let's get to the latest geopolitical stories that we're tracking. A Spirit Airlines plane was struck by bullets as it was landing in Haiti's capital, prompting authorities to close down the airport. The airline says one flight attendant was injured and the flight diverted to the Dominican Republic, where it landed safely. Spirit, along with American Airlines and JetBlue Airways, have suspended flights to Haiti. Climate negotiators have secured a breakthrough on day one of the COP29 climate summit. They agreed to rules for a United Nations-administered global carbon market, which aims to unlock billions in finance for developing countries. However, some climate groups say the rules still have significant issues and criticised what they called a backdoor deal. Indonesia has denied recognising China's disputed claims in the South China Sea. A joint statement during President Prabowo Subianto's Beijing trip said both countries would collaborate on maritime initiatives and develop areas with overlapping claims. But Jakarta's foreign ministry has clarified that the statement can't be interpreted as an acknowledgement of Beijing's controversial 9-line claim. Well, the US military says it's launched strikes against 9 targets associated with Iranian groups in 2 locations in Syria. In a statement on X, Central Command says the strikes were in response to several attacks on US personnel in Syria. It says the strikes will weaken the Iran-backed group's ability to plan future attacks. Haidi.
Yes, and of course these geopolitical and security challenges across the Middle East and Ukraine, and certainly a lot of the uncertainty when it comes to Asia as well, will be playing into the next Trump administration and who is in charge of these affairs, right? And we are hearing that President-elect Trump has asked Republican Mike Waltz, who's a Green Beret veteran who has served in places like Afghanistan and across the Middle East, to be the White House National Security Advisor. And really this role coming into these prolonged conflicts in the Ukraine and the Middle East. Trump is expected to try and prevent further escalation by building deterrence against foreign rivals. And we know that he tends to favour more transactional policies or deals with US allies. So we'll be watching that. We have had a number of confirmed roles also being announced as well. Tom Homan, for example, who is one of the Project 2025 authors, he's been confirmed as the so-called border czar. He has said, of course, he would run the biggest deportation force this country has ever seen. In the case of a Trump election, we've also seen the UN ambassador being named as well. Take a look at what we're watching when it comes to Asian markets at the moment. We've talked a little bit about the crypto side of that exuberance, but the Trump trade elsewhere continues to power on as well. Here in Asia, though, we're seeing some degree of caution. Australian stocks is a little bit weaker. Nikkei futures up by just about 0.3%, but Hong Kong is also set to decline as well, and that ongoing disappointment over China's stimulus. This is Bloomberg. This is the Asia trade. We're counting down to Asia's major market opens. And of course, while the Trump trade continues, particularly when it comes to Bitcoin, right, we've got a lot of speculation that 100,000 by the end of the year is where they want this to be headed. We've certainly breached that 88,000 level at a record high. But Paul, we're seeing a little bit more, I would say, a degree of caution when it comes to trading for Asian investors.
Yeah, we have seen a Bitcoin reverse away a little bit, 88,694 at the moment. It was a bit of a soft day around the Asia-Pacific yesterday. We did see Bitcoin-related names, though, perform pretty well. They're likely to have another good day today as we count down to the open in Japan and South Korea. And here we are. We are underway. We've got the Nikkei right now pushing forward by about 0.25%. It wasn't a great day for the Nikkei yesterday. It did end kind of flat, but we have since had the news that Shigeru Ishiba is remaining the Prime Minister of Japan. He will be planning to unveil a fiscal stimulus plan as well, so we'll be awaiting details of that when we get it, and also has an intention to meet President-elect Trump, possibly as soon as next week. We got a yen as well that's a little bit weaker, 153.55 right now, although perhaps a function of a much stronger dollar. And there you see there Ishiba pledging more than $65 billion worth of spending on chips and AI. Taking a look at the Kospi, meanwhile, Kospi had a rough ride yesterday. It was off by more than 1%, seeing some modest losses today, off by about 0.25% at the moment. The won, as well, as you might expect, fairly weak against the greenback. And we will be watching some of those crypto-related names, as well as Bitcoin eyes that $90,000 level. Here in Australia, meanwhile, we have been up and running for an hour now. We're seeing a little bit of softness on the ASX as well, very much a repeat of what we saw yesterday. Most sectors are actually doing reasonably well, but the broader index off by 0.25%. And it's the materials sector that's really suffering here, off by about 1.9% at the moment. We've got iron ore prices showing a little bit of softness, gold declining as well, oil also weaker. We've got the energy sector off by about 1% in Australia as well. So a lot of concerns here about supply and demand for commodities, particularly out of China. You see yields there, the yield on the 10-year just creeping up a little bit. Yields do seem to be reflecting some concern over fiscal expansion in the US and risks to the inflation story as well. All right, for more, let's bring in our executive editor for Asia Markets, Paul Dobson. So, Paul, we've been spending a lot of time talking about these Trump trades. The headline grabber is Bitcoin. That's been surging. But what are the next things that investors need to focus on when it comes to the so-called Trump trade?
Yeah, good morning, Paul. So certainly Bitcoin is the poster child of these moves, but it's not the only thing that's moving that we're paying attention to when we think about the Trump trade. As you were talking about just now, the strong dollar overall also really a part of that, and that belief in the sort of America first kind of message or policy that Trump's likely to pursue playing out in the markets there. I think the next thing that people will want to know is a little bit more on the composition of the Trump administration. It's kind of interesting. The names that we're seeing so far are not kind of establishment names necessarily, but they're more Trump loyalists. If he has a clique of people around him who are kind of, of a similar view, then that's obviously going to be pushing very much his agenda. A lot of yes people maybe, meaning that perhaps things go through relatively unchecked as well. Really important in that will be who the Treasury Secretary is, how much of a fiscal hawk they are, how much they're going to push bond issuance and how much that inflates yields, and whether that becomes a negative over time for the equity market, or whether the sort of pro-growth policies that come with that, the tax cuts, everything else that Trump has been talking about come through and continue to support the equity markets as well. So I think short term, those names is something that people are going to pay attention to. I think longer term then, people really want to know exactly how is Trump and the administration going to introduce the tariffs that have been talked about as well, and what does that look like for the global landscape in due course.
We've seen, preparatory steps being taken by companies already, right? So are we actually seeing their trading patterns suggest that investors think that tariffs could be a market positive?
I think for the U.S. markets, definitely. The equity market has been on a rally there. I guess the thinking is that by protecting American companies from imports, then that should be favorable for U.S. companies overall. I think there's one sort of thing to watch out for there, which is what Bloomberg Economics has been talking about, this idea that maybe there isn't that same potential for U.S. companies to continue to have pricing power and raise their prices for U.S. consumers if they have to meet the mounting costs for those tariffs. And what that would mean then is if they swallow the costs instead, then obviously their profit margin shrinks. And so net, it would turn out to be a negative rather than a positive for US companies, and also not as inflationary as the market is currently thinking. So whether they have that pricing power and can get away with passing on costs from tariffs will be one thing I think that's kind of interesting. I think for the rest of the world, it's much more of a how hard do we go? Is there going to be a blanket imposition of tariffs? Are there going to be carve-outs? Are there going to be sort of phased introductions here? Is Trump going to be willing to negotiate and use this as a starting point in order to get concessions, or is he really genuinely going to impose things right away and then worry about the details afterwards? If it's the latter, and if that's possible to do, then it could be negative, for a lot of Asia's economies, which are clearly exposed here. Also for the euro area, which is worried about this too. So could create a pretty negative shock for various parts of the rest of the world, if indeed that comes through as it has been sort of touted and mentioned and promised.
Yeah, let's dig into a little bit more about the potential impact on Asia-Pacific economies, because a lot of these big economies do run trade surpluses with the US painting a target on them. What are some of the assets that might be worst exposed to a potential trade war or heavy tariffs?
Yeah, I think that everybody is now asking themselves that question, trying to figure it out, trying to work out where those exposures are as well. One conduit will be the currency market. We're already seeing, as we discussed, the dollar strengthening, Asia's currencies under pressure, emerging market currencies in general under pressure as well, and emerging market stocks underperforming the US too. I think then you got to think a little bit more about what is the intention of the tariffs? What is the people going after? Who has the biggest sort of export exposure, and which countries are more open to trade as well? I was reading notes this week talking about Southeast Asia being right in the line of fire here, but I think you could probably say the same about a lot of other places as well, including China. And of course, how China responds to this will be very instructive on how those markets perform and what that sort of means and how it reels across for other markets in terms of equities, but also currencies and commodities too.
Bloomberg Executive Editor for Asian Markets, Paul Dobson there. Let's turn to Japan now, where Prime Minister Shigeru Ishiba is eyeing a meeting with Donald Trump and a fresh economic stimulus package after winning Parliament's backing to stay in the top job. Let's get more from our Tokyo Bureau Chief, Isabel Reynolds. So, Isabel, clearly there's a degree of vulnerability and question marks over the longevity of the Ishiba government and for, ability and mandate for policy making, right? What are we hearing at the moment?
Right. Well, as usual, the Prime Minister gave his initial press conference last night and laid out some new policies. But as you say, there is a question mark over whether he will actually be able to pass those policies. In the past, it was the LDP policy, or the coalition policy was basically the government policy because of the majority they had in Parliament for so long. But now that they don't have that, they will have to discuss every single bill with the minority parties and try to get their support to get them through. So everything is going to take a lot longer. There's going to be a lot more uncertainty over what happens. And that all plays, of course, into the issue of, if he gets to meet Donald Trump next week, as he is hoping to do, we understand. How seriously will Donald Trump take him if he's someone who is vulnerable to a no-confidence motion at any point, who could be sort of felled by opponents from within his own party if things are not going well? So it's a bit of a limp sort of start for this new administration.
Well, we did hear from Ishiba saying that he's announcing a new package for semiconductors and artificial intelligence. What are the details we know about that?
Yes, well, he did try to lay out this new policy. He obviously doesn't want to lose momentum on things like AI and semiconductors. Obviously, the government has already paid out 4 trillion yen, or allocated 4 trillion yen for these kind of subsidies for companies like TSMC to build plants here, and also for the sort of domestic efforts to build semiconductor plants in Japan. So this is a whole new sum. We think it's probably coming on top of the previous sum. But as I mentioned earlier, this is going to be a very long and even more complicated process than before. In the past, when you saw these figures, you might think, well, how much of that is actual cash? How much is it going to be sort of loans that are made available? Those details would come out in following days. But now we've got the added complication of how much will the opposition parties agree to, and whose agreement can he get to pass this package through. So there's a lot of doubt over that. We are hearing that there will be further discussions this afternoon about it, but there's a lot still to learn about that package.
All right, our Tokyo Bureau Chief, Isabel Reynolds. And even though there might still be a lot to learn about that package, well, much like Bitcoin, the market's already made up its mind. Let's take a look at shares in Renesas powering ahead, 6.6% on that news, that Japanese Prime Minister Shigeru Ishiba pledging more than $65 billion in support for the nation's semiconductor and AI sector over the coming decade. We have more ahead on the Asia trade. This is Bloomberg. The SALT iConnections Asia Conference is underway in Singapore, bringing together leading asset allocators and asset managers. Joining us now is Leong, Managing Director and Head of Asia Pacific at CDPQ, Canada's second largest pension fund. Leng, thanks so much for joining us. You're going to be talking on a panel later today, the title being Strategic Allocation in a Volatile World. It certainly is a volatile world. How have you been changing your strategic allocations?
Well, we are a very long-term investor. But first of all, thank you for having me. Now, we're a very long-term investor. So, obviously with volatility, we will need to adjust accordingly, but it doesn't change the overall trajectory of how we invest. We're looking at, anything about 10, 20, 30-year time frame.
Well, we can bank on at least 4 years of a Trump White House, and we're seeing a broad-based rally in a number of assets connected to that, the so-called Trump trades. But what's your view on the impact of this on Asia markets? We were discussing this a moment ago with Paul Dobson. Those countries that run trade surpluses with the US, obviously very vulnerable to tariffs. How are you planning around that?
For us, I think overall, because of the way we are allocated, so we are roughly about 70% allocated in the Americas and 30% outside. So that includes Europe, that includes Asia Pacific. So obviously, from a portfolio construction point of view, I think we're fairly diversified. Now, in terms of the impact of 4 years of Trump, what does it mean for Asia? So clearly, I think the first thing that comes to mind would be interest rates. It's going to stay longer, higher. That's the first thing. Secondly, in terms of trade tariffs, so clearly that will impact. But if you look at that, the latest numbers just came. China's trade surplus with the U.S., it's almost $1 trillion now. And you think about it, how is the U.S. going to manage trade tariffs and with such a big trade surplus? And that applies throughout the Asia Pacific. So I believe that there will be some calibration at the end of it. And that because Asia Pacific remains a very important market for the US globally.
If you were looking at long-term trends, though, I mean, one trend that we can't escape is this one in the US where you have a lot of your exposure of deficits as far as the eye can see, a debt pile that just seems to keep growing and growing and growing with no real plan to address it. If you're looking at a long-term trend, do you have any concerns about that?
Well, as one of those investors that, we have got a lot of benchmarks. And, what we've always been saying amongst ourselves is that if you are an asset allocator and if you are underweight the U.S., you will be penalized in terms of your benchmark. So I think that is always that calibration that is needed when it comes to a portfolio construction once again. Now, so that, I think, again, it comes back to, are you able to build a resilient portfolio at the end of it? So for us, we learned, from the 2008 GFC. So clearly, that is something that we've taken pains to try to build a more resilient portfolio.
In terms of the GFC, as we see regulations being wound back, are you concerned at all that we might be setting the stage for a repeat, and is that why you're preparing accordingly?
I think having been in the financial market for a long time, it's just a question of when will the next crisis be. In fact, I will always remember that one of my ex-bosses in my previous job talks about it happens every 10 years or so. And that, again, comes down to the value of how you construct your total portfolio.
Another long-term theme that I know that you talk about is sustainability, green energy as well. This is a theme that was touched on by one of our guests last hour, Robert Friedland, the Ivanhoe mining chairman. He said that, look, this is just an unstoppable agenda now. The COP29 is underway in Baku this week. There was a focus there on green financing. But do you believe in the short term, at least, that could be derailed to some extent by the Trump administration?
That's something that we truly believe in, that we at CDPQ, we deploy constructive capital. So that is something that we take it very seriously. In fact, we look at every single investment through that lens to make sure that it is constructive, whether it is on the E, on the S, and the G. So on the E side, that is on the environment. We have already about 80% of our portfolio is in low carbon emission. So that is something that we take very seriously. And the same thing with DEI, for example. So we had a total of about 310 conversations with 130 of our portfolio companies just in 1 year alone. So that is something that I think we will continue, regardless of what is happening at COP. So we are a participant at COP. We are a participant in a lot of global initiatives. And on our own, together with all of the fellow market practitioners, we believe that we can continue to make a difference from a private capital point of view.
Just before we let you go, can you tell us about your positions in India? Because that's another popular long-term trade.
Right. We continue to be very invested in India. So, whether it is infrastructure, real estate, as well as the public equity market, we remain very active in India itself. And if you look at the macro of India, this is something that obviously, over the long term, India has got great potential, and they are making a lot of progress in terms of governance. It is very much still work in progress, but the long-term trend is positive. So, I just can't see ourselves not being in India.
All right. Leong, Managing Director, Head of Asia Pacific at CDPQ. Thank you so much for joining us. And we have more ahead on the Asia trade. This is Bloomberg.
Nouriel Roubini says that Donald Trump's return to the US presidency could see the re-emergence of so-called bond vigilantes if he follows through with his big spending plans. I spoke exclusively with the Roubini Macro Associates CEO here at the UBS Australasia Conference.
Certainly the election of Trump is going to make big economic policy differences. The question, what's going to be the impact on growth and inflation? Some of his policies are going to keep growth strong and keep inflation low. He's pro-business. He wants to deregulate the economy. The reduction of tax rates for the corporate sector is going to be good for private business confidence. And moving towards more production of fossil fuels is going to reduce maybe energy prices in the United States. Those sets of policy would imply good growth and inflation under control. On the other side, during the campaign, he said 10 to 20% tariffs on all imports in the US, up to 60% on those from China, trying maybe to weaken the value of the dollar, draconian restriction to migration, if not mass deportation, tax cuts that may be unfunded and increase the budget deficits, and potentially interfering even with the independence of the Fed. If they were to follow those latter types of stagflationary policies, inflation will be higher, growth will be lower, bond yields will be higher because there is more inflation and more real rates with unsustainable deficits. That's going to crowd out economic growth, and bond yields above 5% would imply a correction of stock prices and negative impacts on the economy. So the question is whether he's going to be more moderate or more radical in his policies.
And it's a combination that we need to sort of unpack, from fiscal to immigration to trade to geopolitics. But I wanted to start off with the fiscal. What sort of time frame would you be looking at in terms of the transmission to that, to potentially that stagflation, or at least, pretty reflationary impact? And how does that play out for the Fed?
Well, it's clear he wants to make the tax cuts of 2017 permanent. Plus, he made other promises during the campaign would imply that you'll have another almost $8 trillion of debt or deficit over the next decade. If those things were to happen, I think the market discipline is going to be quite quick. Bond yields have been already going higher before Trump was elected on expectation of his election. They went even higher right after his election. They went slightly lower just because the Fed said, okay, we're going to cut rates and going to wait and see. But if a certain sets of policies, starting with the fiscal, are implemented and imply higher inflation and overheating of the economy, the Fed will have to cut less maybe eventually stop sooner, and in a scenario in which actually other policies are stagflationary, leading to higher inflation, whether it's currency or tariff or migration restriction, then the Fed could even decide to raise rates, and then the Fed and Trump will be on a collision course. I would say, however, is that he cares about market discipline, and if bond yields go higher and the stock market correct, that's a bond vigilantes in the market saying your policies are unsustainable. And if he chooses the right economic advisors, they're going to warn him against policies that eventually have such a market impact and may lead to policies that are more moderate rather than radically populist in the first place.
And you have been critical of higher equity prices and what markets are doing at the moment, which is quite a great deal of exuberance, right? Do you worry when you take a look at what market participants are not pricing in, perhaps, in terms of the downside?
Well, the market has gone even higher after his election because his policies look like they are leading to greater growth, reflationary trades, and overall pro-business, pro-private sector, pro-M&A, lots of other things that are good for the private sector. I think that markets are still in wait-and-see mode to figure out whether the policies are going to be hurting the economy, whether it's tariff, currency, migration restriction, interfering with the Fed, having unsustainable budget deficits are going to be implemented. Maybe the markets believe that the market discipline is going to discipline him in advance, knowing that policies are not sustainable, are going to lead to bond market vigilantes and the stock market punishing him. So the market is optimistic that those things are going to restrain him ex ante as opposed to ex post. And that's why the markets are rallying.
That is Roubini, Marco Associate CEO Nouriel Roubini there. Just want to check in on shares of Korea Zinc. This is quite the story. Korea Zinc shares higher now by 0.5%. It did report a drop in third quarter operating profit, but we were also hoping for an update on its planned $1.8 billion share sale. That's under investigation by the Financial Supervisory Service. Yeah, we didn't get that update. There is a power struggle going on at the company between Chairman Choi Yun-byum and the company's top shareholder and private equity partners. There's a conference call coming up later. That'll be interesting. Korea Zinc up by 0.5%. More ahead on the Asia trade. This is Bloomberg. Breaking news out of Australia, we do have business confidence numbers for the month of October, and they are up. Business conditions unchanged with a reading of 7, but the business confidence reading is improved to 5. This is the highest level that we've seen since 2023. Any number above 0 denotes confidence rather than pessimism. Earlier we had consumer confidence numbers as well, showing a pretty healthy rise. Still in negative territory though, but the highest we've seen since April 2022. Not really being reflected in what we're seeing in markets, though. We've got the ASX currently off by 0.5%. Yields creeping up a little. The currency a little changed as well. We're seeing materials suffering quite a bit in Australia at the moment. That sector substantially weaker over concerns on stimulus in China and what we're going to see there. Elsewhere around the region, the Nikkei better by about 2/3%. Kospi having another down day, off by about 1/4% right now. Although we are seeing crypto-linked names performing pretty well. On the subject of crypto, we've been talking about that a lot recently. We are watching $90,000 as the next level for Bitcoin, and it cracked 88,000, 89,000 for a little while there. Now retreating, but be interesting to see where this asset goes. Of course, a lot of optimism around Bitcoin. President-elect Trump was making a lot of encouraging noises about it on the campaign trail. We've also seen some of its peers rising as well. Ether has been up. Dogecoin's been up as well. That's a favorite of Elon Musk, although all of those crypto assets just retreating a little, softening a little bit after hitting a record. Haidi.
Yeah, on the more bearish side of the equation, of course, is the president-elect's plans when it comes to how he wants to deal with China and the tariff question. In the meantime, China's largest annual online shopping festival has just wrapped up. Investors are closely watching the sales numbers, of course, to get a better gauge of whether consumers in the Chinese economy are spending again. Let's bring in Bloomberg Intelligence senior analyst Catherine Lim for a look at, Singles Day used to be such a spectacle, right? There's been increasing concerns of consumer sentiment, particularly amongst young people, really being in the doldrums. What have we gauged so far in terms of some of the numbers from Baba, from JD this morning?
So, Haidi, they make it more spectacular by lengthening the entire promotion period itself. And not surprising, we're talking about Alibaba indicating that, it's a record high GMV for them again. But notably, no specific numbers. JD.com did also indicate that, we've got a 20% increase in users on their platform during the period itself. But, interestingly, I think as Baba comes through with a confirmation that the GMV number was higher, JD.com seems to be a little lacking on that front itself. I guess my initial takeaway is that it is likely that Alibaba's expenditures and all that investment that is actually put in has actually helped it gain back some market share in the e-commerce space during the festival.
So how are these numbers that we've seen going to impact both companies' guidance for their outlook into 2025?
Great question, Paul, because I think really what we should be looking out for over the next couple of weeks and through December is whether the uptick in consumer spending do hold up in the absence of all that, extensive perks that we've seen during the shopping festival. So I doubt that, we're going to see an incrementally, in a upbeat or an uptake, in the guidance into 2025. Likely still going to be a little on the cautious side of things, but, we have stimulus in the backdrop. And we'll have to actually see how that pans out all the way through the Lunar New Year festival.
What are we seeing in terms of margins and how much is being ceded in the competition between the heavyweights?
Well, I don't think it's going to look pretty this quarter. Specifically, we're talking about the October to December quarter for the e-commerce companies. And again, they are spending a lot, not just on discounts, but they are also investing in logistics. And that is a key service that you need to provide to shoppers these days. And logistics, it comes in, dealing with refunds, making sure that the deliveries goes right. And these are costly investments that e-commerce platform now needs to make. So not going to look good for the margins for this quarter, but I do think that that's already baked into the price.
All right, Bloomberg Intelligence senior analyst for consumer and technology in Asia, Catherine Lim there. China's credit expansion slowed more than expected in October, suggesting the stimulus rolled out so far is not translated into stronger demand for borrowing. For more, our China correspondent Min Min Lo joins us in Hong Kong. So, Min Min, unpack this data for us. What does it tell us?
Yeah, so total aggregate financing had came in, increased by 1.4 trillion yuan. That is below analyst estimates of 1.5 trillion yuan, also below last month's number of 1.8 trillion yuan. And also bear in mind that the bulk of that borrowing is underpinned by government borrowing. So if you look at government bond sales, that took up more than 3/4 of the borrowing, which means that corporate and household borrowing is still quite lackluster. And yes, granted that October is a month where we typically don't see a big number because banks are not in a rush to lend out money. But still, if you compare to the past 5 years average, you can see that corporate borrowing is still far below that number. So the stimulus that has been rolled out so far since September hasn't really translated into a recovery in confidence just yet. And we know the PBOC has indicated that they are going to continue to ease monetary policy. Economists are expecting that the PBOC could also cut interest rates aside from the RRR going into the next year.
The trade surplus is on track to hit a fresh record high this year. So how significant is that? What could be at stake?
Yeah, so the trade surplus is on track to hit close to around 1 trillion yuan this year. So far, year to date, in the first 10 months, it's already soared to $785 billion. That's the highest on record for that period so far. It's an increase of almost 16% from last year. So we know that at the same time, export prices have been falling, and that means that export volume is really enormous. And this really showcases both the bright spot of the Chinese economy and also the vulnerability, because that trade surplus has been a source of trade tension. And if you look at China's largest trading partner, the largest trade surplus is with the US, that had grown by 4.4% this year so far. But what's surprising is the biggest increase is with ASEAN countries. That jumped by about 36% year to date so far. And that tells you that either the exporters are diversifying their destination countries, or they are using these ASEAN countries as potential intermediaries, while these Chinese exports find alternate ways to get to the West. And meanwhile, of course, import demand has been very weak because of the weak domestic demand and also this high replacement rate of foreign manufactured goods. And so the stake is high here because there is potentially a currency war brewing, with India saying that they're willing to let the rupee fall if China devalues the yuan in response to US tariffs.
All right, Bloomberg's China correspondent Min Min Lo there. More ahead on the Asia trade. This is Bloomberg.
My government will always make sure that Australia has a seat at the table and a say in the decisions that shape our region and that shape the world. We're investing in our defence capability. We're promoting security across our region. We're seizing economic opportunities so we reap the benefits for the Australian people. In all of these endeavours over decades, we have worked together with the United States. And I look forward to working with President Trump in the future in the interests of both of our nations.
Australian Prime Minister Anthony Albanese there after what he called a constructive discussion with the President-elect of the United States, Donald Trump, after last week's elections. And despite those warm words, Australia faces risks from Trump's proposed trade and tariff policies, which could inflict short-term pain, including inflationary pressures. Australian Treasurer Jim Chalmers says the country would not be immune from what economists call second-round effects, but he says the nation is better equipped than others to handle those challenges. Well, joining us now here at the UBS Australasia Conference is Arthur Sinodinos, who's the Asia Group Partner and Chair of their Australia practice, and of course previously the Australian Ambassador to the US. Really great to have you with us. So,
good to see you.
Of course, every leader at the moment will be saying it's the same standard line. We'll be working with any incoming US government, right? What's really going on behind the scenes in terms of prepping?
You're right, they will say that, but they mean it because they have to, because this is the United States we're talking about. So before the election in the US, there was a lot of activity in Australia to work out who is going to win, and if so, what are the policies going to be. So I think the Australian government will be relatively well prepared for what's coming, because the President-elect has been quite clear about what he wants to do. And my advice to people is, he says what he means and he means what he says. So promises he's making around tariffs, around trade, taxes, deregulation, more focus on fossil fuel production as opposed to green investment. Take him at his word. And he's got 2 years with potentially the Congress in his grasp to be able to enact a lot of legislation. After that, he could face, in the midterms, a backlash, and his next 2 years would not be as productive. So all the focus is on now. The indications out of Mar-a-Lago are that he's putting his team together very quickly. He's obviously thought about it. We've already had announcement of a number of significant appointments. The ones we're particularly looking for now are Treasury Secretary, Secretary of State, Secretary of Defence. His Chief of Staff, Susie Wiles, very experienced political player. I think she will do a good job of trying to corral him and his impulses, but she's not a policy person. The main policy person, Stephen Miller, the Deputy Chief of Staff for Policy, he's been with Trump since 2016. He's big on issues like immigration, and he will also be sympathetic to the views of people like Robert Lighthizer, the former US Trade Rep, who may be coming back. So I think keep an eye on what's going on. It has big ramifications for all of us.
And with the trifecta control in both majorities, I suppose is the argument that there's less of an ability to step down from campaign rhetoric.
And he has made a big thing about keeping his promises. One of his boasts when he was out there was no more wars. And by that he means that he can clean up Russia, Ukraine, the Middle East, and whatever. So I think he'll be cautious at one level on foreign policy, but on another level, he seems to be very supportive, has been in the past, of President Putin. He's very supportive of Bibi Netanyahu in Israel. And so both those conflicts, which he has pledged to finish, the question is now, how will he finish them, on what terms, and what message does that send about the US and how it would treat issues in the Indo-Pacific, in particular issues around China and Taiwan.
And that's where Australia is uniquely vulnerable, right, both in terms of its economic dependence on Beijing, but also the security dependence on Washington. How does the government position for this? Because we've seen what happens when you get on the wrong side of China through the US, for example.
I think what the government will do is they'll be saying to President Trump, the alliances, the regional groupings in Indo-Pacific for security are in America's interest as well as in our interest. It's not so much we need them, they need us, because American security is intimately tied up with the Indo-Pacific. It's a Pacific power. China is rising. There's got to be a way of handling the rise of China in a way which deters aggression, but also channels the rise in constructive ways for the global economy. That's quite a sophisticated thing to try and put together. But that's the thing that we've all got to work on. How do we work with China to have a constructive outcome in the region? What's the balance between diplomacy and using military deterrence, and so on and so forth? That's the sort of stuff that Australia will be thinking about, because China is our major economic partner, trading partner. And so from our perspective, yes, we want our security relationship with the US, but we want to be able to trade with China, and we want to have a normal relationship with China and not have the economic and trade coercion of recent years. We withstood that. The Chinese had to back off, but we need to make sure going forward we can balance what we're doing on the economic side with what we're doing on security.
And of course, we know the Prime Minister, just a few months into the second Trump administration, will have to call a federal election. Do you think this government or a future government has now that diplomatic deftness to be able to strike that balance?
The best advice is look back to the first term to work out how President Trump operated. The only difference is he may be more effective and efficient this time because of that experience and the personnel he's bringing in. So there are markers for governments about how to handle someone like Donald Trump, and a lot of it is around being able to relate what you want done to what he is interested in. It's at that level, it's very transactional. And so I think it's important for the Australian government to have that mindset. It's unsentimental. It's not emotional. It's all about how do we do business with the leader of the free world, and we have to find common ground.
It was quite interesting. We saw, even just locally in Potts Point, right, in sort of very inner city diverse Sydney, individuals supporting Trump on the day of the election. So I do wonder, do you worry about culture wars spilling beyond US borders into places like Australia?
There's no doubt that his victory has emboldened people on the right, particularly the further right, as opposed to the centre right. But that was always going to happen. And he's not so much a cause of that. He's also a symptom of something that's happening around the world, where in Western societies in particular, there are a lot of issues where people feel that change is happening very quickly. They feel like they're losing their place in the pecking order, and they want some feeling of what are the absolutes. And in some ways, Trump appeals to this idea in America that he can restore America and the place of some Americans to where they were in the 50s and 60s almost. And that's why a lot of his ideas are actually ideas out of the 50s and 60s in many ways. But he's also very modern in the sense that he understands how to target various groups in the community. So he's been very good at targeting his messaging, but a lot of that messaging is really around the idea that there are absolutes. This is what I stand for, this is what America stands for. And so issues like transgender, for example, they became lightning rods for being able to say to people, well, we believe in absolutes. Not everything has to be relative, right? And so that's something that appeals to a lot of people. When
it comes to engagement with China, do you have a degree of comfort that perhaps the relationship between Canberra and Beijing is on a more solid footing now, and therefore perhaps better placed to navigate the next 2 years, 2 to 4 years?
We are better placed. The government has done a lot of work to stabilise the relationship, and that's important. What it means over the next few years also depends in part on how America treats China and how China then responds, and whether China, in effect, seeks to divide and conquer Western allies like us and divide us or separate us from the US. In other words, to what extent does one side or the other ask us to more explicitly choose which side we're on? In Southeast Asia, if you speak to former Prime Minister Lee and others, they said, look, the question should not be about choosing one side or the other. It's about how we all work together. In Australia's case,
Singapore is a diplomatic masterclass in that sense, right?
Absolutely. But in Australia's case, we've chosen our security partner, it's the US, but we want the economic and trade relationship with China. So we will do what we can to keep going on both those channels. If we're being asked to choose, well, we're going to change the question, because that's not the situation we want to be in.
Thank you so much for your time today.
Thanks.
That's Arthur Sinodinos, who's the Asia Group Partner and Chair of their Australia practice, and of course a former Australian Ambassador to the US. Our coverage from the UBS Australasia Conference continues today. Later on the China Show, Alcoa President and CEO Bill Oppinger joins us with his outlook when it comes to Chinese commodities demand and whether Alcoa can continue to benefit from US trade policy under a second Trump administration. You can hear more on the Bloomberg Australia podcast too, delving into the biggest stories shaping the country's role in global business. You can find that at Apple, Spotify or Bloomberg.com. More ahead on the Asia Trade. This is Bloomberg.
Let's take a look at how some of Japan's mega banks are tracking, all pushing higher in the early going in Japan. We have seen that they're going to report combined net income of more than 2.4 trillion yen for the April to September period. This is according to Nikkei reports. Those reports are not attributed. But if correct, that would be the largest combined first half net income for the three mega banks since that structure was formed back in October 2005. In terms of what's driving it, the profit's been seen boosted by lifting of the negative rate policy and the unwinding of cross-shareholdings as well. So we might see some of those lenders raising their full-year forecasts as well. But for now, shares in those three Japanese mega banks are pushing substantially higher, Haidi. Well, Hong Kong appears to be recovering from a significant brain drain. Licensed finance jobs hitting a record amid the city's push to become the world's biggest wealth management hub. Global business reporter Jin Shan Hong, I just promoted you there, Jin Shan, joins us now. Tell us about the latest jump in these licensee numbers. Which sectors, which companies are driving this increase?
Yeah, it's actually been a surprising finding for myself as well after collecting 500,000 of license records officially published by the securities regulators in the city. What we saw was for 2.5 years, these licensee count has just been decreasing generally for the city. And in the past 4 months since June, we seem to be on this rebound trend that actually brings Hong Kong back to the record level of total licensee count. And the sectors that are growing in terms of activities are advising on securities and asset management, which actually jives very well with the city's goal to become the world's one of the world's biggest wealth hub. So with the companies in regard, we have CITIC Securities as well as Millennium leading these two sectors respectively. But at the same time, we also noticed that SFC, the regulator, has launched a new license type in October, also adding hundreds of licensees account into this database, which is also their effort to increase oversight on public funds.
So what are the reasons that are driving this rebound? What's it going to mean for Hong Kong?
Well, in the past 2 years, this Hong Kong government has really launched a myriad of policies to help support to shore up the industry. There's the increasing link with the China market. There's also the visa, talent visa scheme that has expanded access for a lot of people to join the city and find jobs here. And we are also seeing there's increasing geopolitical risks that make it more necessary for the city to have wealth managers and investment managers to advise high net worth individuals on their investment decisions amid a volatile market. And with all that, we are also seeing on the cost side, the rents in the city are near record high with this influx of talents from both mainland China and internationally.
All right, global business reporter Jin Chan Hong there. All right, let's just take a look at how we're tracking in terms of futures. We do, of course, have markets in China and Hong Kong opening at the bottom of the next hour. We've got mainland Chinese futures are currently looking a little bit softer. That would follow on from what was a reasonable day yesterday for mainland Chinese markets. We've got TAIEX futures, though, looking substantially weaker. It was a positive day for the S&P 500 in the US as well. Equities were trading, even though it was a public holiday, and it was a positive day as well, but S&P futures right now off by a few points. That is it from the Asia trade. Markets coverage continues as we look ahead to the start of trade in Hong Kong, Shanghai and Shenzhen. The China show up next. This is Bloomberg.